What's going on, everyone? Happy Sunday. Hope you guys had a. What's going on here? All right, make sure you got audio check here on my end. All right, we're good to go, guys. Hope you guys had a good long weekend. Hope you guys enjoyed the 4th of July for the American folks enjoying that holiday. And for those of you guys that aren't, hopefully you just enjoyed the long 3-day weekend, little break from the markets. Took it easy on my end trading last week. Bank holiday, non-farm payroll. Just not really active week for me. Finished up about break even on my live accounts, and I think on some funded put up about 5K, but just really light trading on my end. So this is a week I will be expecting to be a little more active, again, considering it's not NFP and bank holiday. So I do expect a bit more cleaner, better opportunities this week, and that's what we'll go ahead and sort out on this one. Appreciate you guys joining us. Didn't do any announcements anywhere, so for those of you guys that just know, the usual time is 2 o'clock. Appreciate you joining. If you aren't able to get here on time, no worries. The recordings will always be uploaded. I got about 40 in here. That's not bad. Amy, hello. Traders, Nirvana. Hey, I sent you a DM on Discord. Can you check? Yeah, sure. What's it about, my man? I got a lot of DMs, brother. It's nothing personal. A lot of people trying to get Dylan time. Hey, Dylan, happy holidays. Yeah, thanks, Eslam. Appreciate it. To you as well, sir. Yeah, but what are you talking about, Nirvana? Some money-making opportunities or what? What's going on? All right, well. Kevin, happy Sunday. Happy Sunday to you, sir. Hope you had a nice 4th. I sure did, man. Hope you did as well, Kevin. Hope you did as well, sir. I wanted to discuss something. Yeah, everyone does, brother. That's why I'm asking what it is you wanted to discuss. But it's all right. I'll take some time to check out my my DMs after. No worries. Good to see you. Yeah, glad to be here, Barry. Good afternoon, everyone. Good afternoon to you guys. Happy Sunday, Cyclops. All right, guys, let's go ahead and get into it then. We'll start from the US dollar, and then we'll go into indices. We nailed Dow to the wall. Dow was a lot stronger than the other averages last week, which is what we expected because NASDAQ was already above these highs, right? So S&P and NASDAQ, or sorry, S&P and Dow would look to catch up with the S&P with NASDAQ to reprice above those highs. So let's go and get into it. We'll start with the US dollar. We see, opening up this monthly chart, Mr. Dillon always teaching the golden stuff. Glad to be here with you guys. Oh, and then on the YouTube, speaking about that, because I know a lot of you guys here are part of the free YouTube community. As you guys know, I'm supposed to get that Notion video out. I was going to do it end of this week because I had used it last week to get my mentorship content out, get that organized, structured, put together, recorded, you know, the whole 9 yards. It's not easy making the #1 trading education in this space, but damn does the trading space need some good quality education. So that's what has my time occupied. Starting on Monday, I will be more active on the YouTube, and I will make that Notion template. I'm finally going to break down the whole Notion template, how I organize my entire week for journaling, reflecting, so that you guys can create that resource for yourself. And that is something I will be doing on Monday after I get done with these next few videos for those that I'm working with directly. So with that, guys, let's go ahead and break it down. On the monthly chart here, so monthly chart, we were looking for this down close candle here that had this gray box over here. Market delivered down into that pretty nicely here, and now I want to see how we trade there going forward. We have this swing low here, which again, I'm still expecting monthly chart remain heavy. Nothing's bullish in this price action just yet, so still sticking with the underlying bearishness. I guess weekly chart, working our way down here. Again, we haven't been trying to call a bottom in this market. Everything's been bearish. Everything has been heavy. So we see this fair value gap here. We closed down below it, traded up into it, hit the lower half there. Beautiful rejection, respecting the lower quadrant. If only support and resistance worked that well, huh? Hits it perfectly, breaks down, attacked the sell side here we were looking for. And then if we zoom back out here, you'll recall on the weekly chart, we have this swing low here and this swing low here that we have as a target. The other target I gave you guys was this big beefy down close candle here. That is a bullish order block. Order blocks are not just entries, they're also targets as well. So if the market's gonna keep selling off, the order block is a good target. We hit upper quadrant. I gave you guys the midpoint as a draw and we fell just short of that there. What I'm using these levels for as the market's dropping is I want to gauge how weak the market is, right? So for example, if we have a down close candle, right? What I want to see is if we're going to make a run for the sell side here, I want to see the market aggressively trade through the 50% and close below it, because that would tell me that institutional order flow is still very bearish. It's still very heavy. and then it's going to keep accelerating below the lows. But what if the market, let me get that level back on there. What if the market trades down into it like this, stays in the upper half, finds support and trades higher? That would be not as bearish, right? That's not signaling that institutional order flow is extremely heavy. But if we trade down through it, close below it, right, and then keep accelerating through it, that would indicate to me that the market is bearish. So that's how I'm watching these levels here. All these levels can be used to read institutional order flow, your wicks, your fair value gaps, your order blocks. You just got to know how to read the charts. Sell side here, next draw, as long as we remain bearish. I'm bearish on dollar as long as we remain below this up close candle here. So this up close candle should not be violated to the upside if we're going to remain bearish. If we do trade through this up close candle, then I will be neutral to bullish, and I'll have to assess how and when we trade if we get to that point. But as of right now, everything's bearish on dollar. Nothing is positive for US dollar right now. All right, working down further into the daily chart here. That is not an inversion fair value gap. That is a regular. All right. So broke down below this low here. We're accelerating down through it. And then again, we touched on these lows here being the draw, as well as the 50% of that weekly order block. We have several inefficiencies here on this downside price run, but I do not want to see us overlap or overtake these levels. So more specifically, all right, good. So that creates a bullish breaker here for me. Or sorry, bearish breaker. All right, so bearish breaker here. Want to see how we trade there because this high took out this high here. I do not want to see that violated. So we can trade up into that level, like that's permissible, but we should stay in the lower half and then sell off and continue trading to the downside. As long as we remain below this breaker here, this last down close, I want to see us keep trading lower, right? Very similar to what we did here with this breaker here, right? High, higher high, broke down through it, and then it's going to act as real resistance, sell off, and then you see how it respects that level and careens to the targets I'm giving you. Essentially the same thing we're looking at here with this particular level. So lower prices on dollar as long as you remain below that key level. Hourly chart here, if you look at dollar last week, Monday through Friday, right? Really small range consolidation price action. Who would have guessed? Non-farm payroll week, and it's a bank holiday on top of that. So when you have that, generally those weeks will be small ranges and be used for time distortion. Time distortion is just simply saying when the market's consolidating, when it's not running two levels, when it's time for it to do it. So until it reaches that time for it to run, it'll consolidate and stay in a range. That will generally happen on weeks when you have a bank holiday. So no surprise that we had a really small range week this week for dollar. And that's why probably foreign currency was a little more difficult if you weren't in there scalping, right? Still tradable, absolutely. There's still scalps, still opportunities in here. But what you don't want to do is look for huge explosive price runs when it's just not going to give that to you. So we're in a range here. You guys know what I'm looking at based off the daily chart. So nothing much more here on the dollar. Bonds, I've got nothing to say. They've been in that same range for the last few weeks. Nothing's changed on the past couple weeks for bonds. So for those of you guys that have been with us for a while, you can see we've been in a consolidation the entire year on the bond market. So until we leave that consolidation, it's just going to be a lot of overlapping, consolidating price action. So nothing much to discuss there until we leave that range. I'm not really interested in calling markets and working with markets like this because it doesn't give you a great deal of precision in your trading. I always get asked what I'm drinking here. It is a iced Americano double espresso. All right, so moving right along. Before I get into NASDAQ in particular, let's look at the other averages here. Skip the weekly chart. For those of you guys that were asking me about Dow, how was that, huh? Absolutely money yesterday on the Dow. I wonder where you guys are at. Hopefully you guys can give me my flowers for giving those Dow targets to you guys. That was exceptional. All right, so looking at S&P, NASDAQ, and Dow here. One of the things that we covered last week was that the NASDAQ had already reached these highs here, right? It already reached it going into this week. So the Dow, right, and the S&P would be in a hurry to catch up to reprice above those highs for market symmetry. What does market symmetry mean? If there's two correlated assets, right, like S&P and NASDAQ, right, they're the stock market, we expect if S&P makes a lower low, NASDAQ should make a lower low. If S&P makes a higher high, NASDAQ should make a higher high, and that would be a symmetrical market, right? When the markets aren't symmetrical, that is SMT. But this was not an SMT divergence bearish. Like we were not saying, all right, NASDAQ reached the high, S&P didn't, this thing's going to sell off because the market's bullish, right? So that's the difference between SMT and Six Sister you can't just look for SMT as a pattern. It's not going to work. You have to understand, is the market bullish? And if it is, it's going to erase that SMT. So that's going to be Six Sister, where S&P is going to look to catch up. Dow is going to look to catch up. So when you saw the markets were really decoupled for some of the days this week, which markets were trading higher? Dow and S&P, because they have unfinished business above those highs. So they're going to be in a hurry to reprice to those levels. And then I'm not going to touch on Dow past this, but for those of you guys that were trading Dow last week, I gave you the weekly, gave you that gap here that the market would want to close in that gap. And then on the daily chart here, right, gave you the buy side here. And then through that buy side, we had this huge inefficiency here the market want to trade up into. So all those targets were nicely delivered on the Dow. And you may be thinking, well, those inefficiencies aren't on the continuous contract, but they're still important. They're still going to be referred to. So that's why this buy side here, this high, and this inefficiency was the draw for me on Dow. You can see the Dow just really nicely expanded up into that first. So for the Dow traders, keeping you guys ahead of the curve, even though that's not one I really like to trade, but nonetheless, still precise. All right, let's go over just to NASDAQ now. We'll start from the 3-month chart here. So we'll go out to the continuous. Turn back adjustment off. All right, guys. So the 3-month chart, I did a short review of this in the free Discord. So if you're not in there, you're not getting week-to-week updates, intra-week updates, or what I'm looking at, what's important to myself and my team. So I definitely recommend you guys being there. We have been walking this market on the higher time frame like an absolute dog. Weekly, monthly, daily, hourly, you name it, we're given targets and it's delivering it. And the coolest thing is that that's what we're actually using to make money, right? Like, so when we're intraday trading, the bias, the higher time frame targets that we're using give you lots of opportunities when you know what to look for. So it's not just us calling targets for the sake of sounding smart. This is the shit that makes you money. All right, so we have a 3-month chart here for NASDAQ. We have these 3 consecutive down close candles. That is a bullish order block here. Extend that through. Put that on the high of it here, and let's make that 4 so it stands out to you guys. This is a bullish order block here, 3 consecutive down close candles. We opened the Q2 candle, or the open of April. We opened, we dropped down, we smacked the bullish order block. Smart money capitalized on that level there, and then the market exploded higher. When we drop down into the monthly chart here, we now see that bullish order block becomes a bullish breaker in here. So every higher time frame order block is a lower time frame breaker. If you didn't catch that with me before, now you got it. So because that is a higher time frame breaker, or sorry, a higher time frame order block, it will be a lower time frame breaker block. That's a good one. So 2 consecutive up close candles here before the drop. That's your bullish breaker. We dropped down into that on the monthly candle, but we also did something else. We traded into the bullish breaker, but we also did what? We also dropped down into equilibrium. Look at how perfect this is to me. Let me take off these other levels. Don't want to distract you guys here. Take that off here. All right. So we have the equilibrium level here. This range low, this range high. The market dropped down into the bullish breaker, yes. Here. But more specifically, let me take that off now. To equilibrium of the range. Equilibrium is how we measure overbought, oversold. If you're looking at indicators, this is always going to evade you because you're not looking at the actual ranges that price is giving you to work with. So indicators that give you overbought, oversold is a total religion, right? It's loony. It's not going to work for you. But if you use overbought, oversold with measurements and price action, it's going to work very well for you. So why have we been bullish the last 3 months on stock index futures? Because we dropped down into a discount. We hit equilibrium here, and then the market decisively traded away. That communicates to smart money that they were capitalizing and buying inside this discount here. So if the market's dropping into what? Internal range liquidity here, that's your sell side, and then the market reaches for external range liquidity here. So why were we bullish the whole month of June? Because of all these factors here. And if you extend that through, you get a nesting of these levels here. So premium and discount is good, right? Understanding your dealing range, but more importantly, understanding where the PD arrays are inside those ranges is what's really going to give you the precision you're looking for. Bullish breaker, equilibrium, bang. All right, working down into the daily chart here. Dylan, I just want some targets. I don't need the PhD masterclass. Yeah, it's all good. More than you signed up for. All right, so on the weekly chart here, we had that huge drop at the beginning of the year. And again, all that was doing when you understand the context of the market was dropping down into a discount here. But more specifically, clearing out these equal lows here. So if you see these relatively equal lows, sell side, that's where interbank smart money traders are going to go long, right? Buying the sell stops here. And then we get a nice displacement higher away from that. And then the market attacks the relatively equal highs that we've been looking here for some time. We will go back to the current month contract now that we did kind of macro perspective. So I always get asked, Dylan, I always see you using the NQU When do you ever use NQ1, the continuous contract? When I'm doing macro analysis. So if I'm looking at a 3-month chart, a 1-month chart, a yearly chart, right? So if you look at the yearly chart, where are we at right now? Open of the year, manipulation, drop down into a bullish order block here, and now expansion higher for the rest of the year. At least as of right now, that's in the cards. So whenever I'm looking at 12-month, 3-month, 1-month, I will usually use the continuous contract. And then once I determine what I'm looking for on the continuous, then I'll go back to the current month contract. I like the current month for trading. So equal highs here was the draw, really nicely delivered. And if you look at last week's trading, this is the start of the new week. So this is last week, open low, high close, right? That's what we're looking for when we're bullish and the market digging higher into equal highs, right? So we're not trying to call it top in this market. Everything is still bullish on NASDAQ. All right, so dropping down into the daily chart here, let's get some targets rolling. We have on the upside, turn 3209. All right, so I like 23,800 then for macro perspective. 23,800 would be solid because what I'm doing at all-time highs, because again, well, I'm saying again, I'm assuming you guys are in the Discord again. If you're not in the Discord getting this information, you're totally missing the boat. We showed you guys exactly how we got all the targets we were looking for on Thursday, and I'm sharing all that for free as well because at all-time highs, it's different than when the market's in the range, right? Because when we see this price action here, we see the market's inside this range here, right? So there's data points that we can use and project through and have all sorts of precision with the market when we're inside the range. However, now that we're above all-time highs, the market's in price discovery, right? There's no data up here. So what we need to do is get mathematical projections from market structure that's already been delivered for us to predict and project with a great deal of confidence where the market should trade to. So what I'm doing is I'm anchoring to key market structure points. So this is a long-term low here. This is an intermediate term high. So I'm going to use this for projections. This is an intermediate term high, right? And this is a short-term or intermediate term low. So I'm going to project higher with this. Tommy used this as a target last week, myself as well, but the 23.29 level is one of the draws we had. Through that, I like 445. And then major next target I have is the 800s. So I like where these are converging, looking at the 800 level. And then through that, I would use all these targets on this leg here. And then that would give me a good start. That's what I'm doing for macro. Intraday, there are other things I'm doing. And that's why, again, I was recommending you guys go to the Discord because you guys will actually see how I'm using it candle by candle, minute by minute intraday when I'm working with those that I'm mentoring and coaching, showing them, walking it candle by candle, how the market should behave, where it should go. There's specific things I'm doing intraday on these 1 and 5 minute charts that also give me precision for what I'm looking for while I'm trading, right? So for macro perspective, for like higher time frame targets, I'm using structure on the daily for what I'm aiming for in terms of macro targets. But in terms of intraday, right, when I'm in there scalping, trading the morning session range, there's other measurements I'm using. And that's something that I covered in the education channel in our free Discord. And that's something that I'm using at all-time highs because, like I said, there's no data. So we need to be able to project targets that we're going to use. Because what you don't want to do is say, well, I'm just going to go short. Because going short is definitely not going to help you if the market's going to keep ripping higher. So that's what we're looking at on indices. I'll give you guys my targets on the higher time frame. Let's drop down to the hourly chart real quick, and I'll get into your guys' lovely questions here. All right, so watching on the 4-hour chart, this bullish breaker here, this is going to be a key level for me. So want to see now that we're in that, how we trade there. If we stay above that level, we're bullish. We're looking for higher highs. If we trade through that, that would not be bullish in the short term. And then we may need to trade down into this weekly fair value gap here. So that's what I'm watching here. One thing we need to consider, guys, is that from this low here that we priced in from when we were calling this market higher, we've called the market for almost 4,000 points. So if the market's going to retrace, that's totally reasonable. We've already reached major targets here, all-time highs, all the buy side that's above that funds are short from with the buy stop here, that's already been engaged. So it's reasonable for the market to retrace. If it does retrace, I would look for this weekly fair value gap here. That would be as far as I'd be comfortable seeing a retrace. And then ideally, we would see the market stay in the upper half as well, right? So ideally, if the market does trade down into that gap, that's fine. But I would want to see it stay in the upper half, and that would give me continued confidence that the market is still indeed bullish. So that's the business here. That's what would invalidate my bias of dropping down to the 4-hour chart. I prefer to see this 4-hour breaker block here hold price higher. But if we start to trade through it, that's fine. The market's likely going to want to trade down into this weekly gap here, which again is totally permissible because we've already seen a huge run higher. So it's reasonable for this thing to retrace and give a measure of a short-term discount before that next price leg higher. All right, guys, hope so was insightful. I will get to any of the questions you guys have now. Amy, hello. If you haven't yet covered them, gold, silver, oil, yeah, absolutely. Real Madness, Mr. Dillon, always teaching gold and stuff. Much appreciated. Thank you for joining. Would you try to frame an SMT on an inverse correlated asset like dollar and gold? And what other asset would you rather use to frame SMT? Much love for what you share. We love the masterclass. Appreciate it, sir. Yeah, absolutely, man. So in terms of SMT with non-correlated assets, absolutely. One of the things that I do use SMT for a non-correlated asset is dollar, right? So if I'm trading indices, I'm also looking at dollar. And essentially the same way you would use SMT with the dollar and euro, right? Like for example, if, let me pull it up here. Euro USD, there we go. All right, so for example, like the same way we would use the SMT with dollar and euro, right? If dollar makes a lower low, then we would want to see euro make a higher high. But if euro does not make a higher high, while dollar makes a lower low, that's an SMT divergence. I do the same thing with dollar and indices. So really good question. Absolutely. You can use assets that are correlated but aren't one-to-one, right? Like euro and dollar is basically one-to-one, right? Dollar higher, euro higher. So it's obvious that S&P is used for that. Same thing with like S&P and NASDAQ. Like S&P is very obvious to use for that. But for non-correlated assets, absolutely as well. Like I will use dollar SMT with indices, and that's something I am looking at on higher time frames. And you can absolutely use it for other markets as well, right? Like dollar, gold, absolutely. Yeah, that's all giving you a great deal of insight into the market structure. Because these assets are correlated, if dollar is posting a lower low like we're seeing here, then we should see, in terms of market symmetry, we should see NASDAQ making a higher high, right? So dollar making lower low, NASDAQ making a higher high. In a perfect world, that's what we would see. However, if I see NASDAQ making higher highs and then dollar fails to make lower lows and it starts to trade higher, that's potentially telling me that NASDAQ is suspect in its rally and that it could reverse. So that's how I'm using SMT with kind of non-correlated assets, and it's absolutely very impactful in your analysis for sure. Gold, silver, oil, yeah, let's go check it out. Yeah, if you have any follow-ups, Royal Madness, let me know, and very much appreciate the support and the donation. Thank you very much, sir. Really good question. So for oil, I'm still watching how we're trading inside this gap here. So far we dropped down into it. We haven't cratered down through it. I want to see how we trade inside this gap here. As of right now, things have been rather calm, I guess, with regards to the conflict in the Middle East. Things have started to settle down a little bit. So in response to that, silver, absolutely. Silver. I'm getting ahead of myself here. Crude oil absolutely plummeted, but we plummeted back down to a key inversion fair value gap that I'm watching. I do like to see how the market is staying in the upper half. So it is respecting the upper half, but I will see how we trade from there. So how we trade from this inversion fair value gap is going to give me the long-term perspective I want to see. I still haven't abandoned bullishness on oil. It's just a matter of when they're going to want to take it higher. So I will be watching this key level to frame that going forward. Gold. All right, so gold dropped into a discount of its range, this range low, this range high. We dropped down below equilibrium, and then we took out sell side here. After taking out that sell side, the market then traded higher, traded above this opening price there. So what I want to see is if this can act as a bullish order block here. So we traded up above that opening price, I want to see us find support inside this bullish order block and then make a run for these equal highs here if we're going to remain bullish on gold. If we lose this down post candle here, then I'm neutral to bearish. The reason I would be neutral, I would just go straight to bearish, is because this market's at all-time highs. And again, like I've been counseling you guys the last about year and a half or so, you don't want to try to fade to all-time highs, right? When markets are at all-time highs, they will literally just keep ripping higher. And if you try to short it, they will rip your face off. So just keep focusing in line with buy models until they fail you and start to show indications that the market structure is not bullish on the higher time frames. And then the last one is silver. And silver, I think we've been calling this one with a great deal of precision, nailing this thing to the wall here. So if you guys recall, bullish on silver, we traded down into this breaker here, this highest up close. And then remember what we talked about with this gap here. Remember I told you guys we wanted to see this act as a breakaway gap here. And all a breakaway gap means is we want to see some of it left open. It can trade into it. Doesn't mean it has to all stay open. It just means we want to see the majority of it stay open, right? So drop down into it, stayed in what? The upper half, finding support, trading higher. So I don't know who always asks for a silver. I know Amy for sure, but I know there's a couple of you guys that like silver, and we've been all over this one. So fair value gap with the bullish breaker, like I covered, that's a very strong algorithmic pattern when you see that. Not that we're pattern trading, right? Because pattern trading is retail, right? That's street money, uninformed money. We are trading patterns within the context of a narrative, which is this market is going higher. So if it's going higher, this imbalance of this breaker will support price. And those are my words. And the market has done that. It's left the lower half open. Exactly what you want to see if you are bullish. Dropping down into our daily chart now. We see the market drop, took out sell side here below this low. This creates a intermediate term low here. And now the market's blasting off. So we will look for this high here at the 37s. And then through that, we'll have to look at the levels that we have on the left here for other targets. So let's see what we got here. Yeah, so 37.50 be a good target. And check out the weekly chart here. Zoom all the way back out. And then we could look for the market to close in this gap here. So where does that put us at? The 39s, yeah. So 39s, really 40s, and then we have that bearish order block here. Yeah, so I like silver into the 39s and then eventually into the 40s. So everything's bullish on this market. Nothing is telling me we're going lower. So keep trusting your buy models on silver. And then for those of you guys that know how I feel about metals, I think they're a great long-term investment. So if you are long precious metals as an investment, you're absolutely crushing it with gold and silver. Islam, can you kindly repeat the part with standard deviations? Do you use long-term low to intermediate term low to the highs to frame where the levels are overlapping? Yeah, so when I don't mind giving all the goods for free. I like the key structure points, right? So what I'm looking at when I'm looking at market structure, and so the reason it's kind of hard for me to dive into is because if you've already been working with me, you know how to read short-term, intermediate term, long-term, and frame these swing points. So it's easy for you to just jump to what I'm saying. If you haven't, it may require a little extra study. So if you're not able to follow everything I'm saying, that's fine. Keep studying. You will get there. What I want to see in terms of market structure, though, when I'm running projections, is I want to measure from the long-term low to an intermediate term high, because I want to frame these measurements based off of key structural points, right? So this is a long-term low here, and this is an intermediate term high. So I like this as a draw here. I could also run projections from this intermediate term swing here to this one here. And then now we can see we have overlap here at these levels. So there's several ways to measure the fib projections. And what I'm essentially doing when the market's at all-time highs like this is I'm measuring key structure points, right? So it's not that one's right over the other. From my experience, what I've learned is the most effective is framing key structure. So this is a long-term low to an intermediate term high. This is a intermediate term high to a intermediate term low. And then I'm running projections on several of these price legs. And then I'm seeing where they agree and where they converge. And then when I see that, that gives me a great deal of conviction to have that as a higher time frame target. But then when I'm intraday, right, let me show you an example here. Just want to make this complete. So I'm going to go ahead and go into showing you guys kind of what it is I'm doing with my trading. at all-time highs, right? So when we're at all-time highs here, this is Thursday when they have the NFP release. I don't know why they have that blue shaded thing there. Let me take that off. Where's that even at? Oh, here we go. All right. So here we have 9:30, right, on Thursday, last trading day of the week. And there's no data here, right? So there's no buy-side liquidity, there's no inefficiencies, there's no new week opening gaps, right? There's no equal highs, there's nothing to aim for up here. So how do you trust going long? Well, you have to run fib projections. So the same logic I just taught you on the daily chart, right, with key swing points, I'm doing the same thing here to here. And then that's where you get -1, -1.5, -2. And then if you extend it through, you can see it gives you a great deal of precision in terms of upside targets to work with. There's other ways to do it as well. There's other targets. There's things I'm using with the opening range to project higher, but those are things I'm not going to cover all that here. This would easily turn into a hour-long lecture, but those are all things I'm doing, right? So I'm not just doing the daily swing points is what I'm saying. I'm also, when I'm intraday trading, right? Like if I'm long on this price leg here in the morning session and I'm looking for higher prices, which we are, right? We're trusting buy models. Then how do I know what targets to hold for, right? Because my daily targets may be, you know, hundreds of points above market price. And so what I'll have to use is the market structure intraday to project price runs. And then I'll also throw this in here as well. Also use the 15-minute chart for it as well. And then what I'll measure is the manipulation of the daily range, right? So we have midnight opening here. This run in the London session is a Judah swing, right? Because it's running against the higher time frame bias, right? So what I'll do also is I'll measure the Judah swing in the daily range, and then I'll project that higher for targets, and that'll give me good targets to work with as well. So a lot of different ways to skin this cat. The more precise you want to get, the more you can add to it, but they all work. They all make money if you know what you're looking for, and we've been calling higher prices, and that's something you want to stay looking for. Again, you don't want to try to short all-time highs because, like I said, if you try to go short this, it will absolutely rip your face off. Right? Just a little joke we had in the Discord this weekend that the Bears, man, just wish they just would have slept in on Thursday after that face rip and rally. So that's the business on standard deviations. Hopefully that answered your question, Islam. Benson, what's your view in trading with no high or medium impact news? What do you suggest? Yeah, trading without medium or high impact news is fine. When that's the case, I focus on where the volatility injections are scheduled. Think, if there's no high impact news, where's the volatility going to come in? 9:30 open and inside your macro windows. So you heavily rely on those other timing elements when there's no high impact news for that particular session. Justice, I'm still bullish on crude oil. Nothing changes as of now. The same outlook with gold from a technical standpoint? Absolutely. Yeah, I agree. For sure. For sure. I don't see anything changing with crude oil either. And like you said, gold all-time high. So from a technical standpoint, everything is bullish. And also from a fundamental standpoint, right? I mean, let's be real, guys. The currency in the United States is collapsing at a super fast rate. So it only makes sense that gold, right? That gold is going to keep ripping. I mean, if the currency in the United States keeps collapsing, then gold's going to go higher. And if you don't think it's collapsing, look at the prices of stuff at the grocery store, right? Look at the cost of homes. Look at the cost of living, right? You don't think the currency is collapsing? Come on now. How confidently can I enter on a PD array aligned below the 9:30 open, but it's still above the midnight open? Can I consider that as strength on the asset as a tease to bounce to a discount lower? Yeah, good question, Royal. I see what you're saying. So one of the things that I share in terms of the opening prices, because you'll know that some of my videos and some of my lectures, you'll see sometimes I'll use midnight and sometimes I'll use 9:30. They're both important. Midnight is the opening price that I'm looking at as it relates to the daily range. 9:30 is the opening price that I'm looking at as it relates to the AM session range. And what you'll see, Thursday is a great example of this, is not all the time when we get to 9:30, we're close to the midnight opening, right? So if we look at the midnight opening, it's like way down here, right? So this isn't the exact opening price, but it's close enough. So if the midnight opening price is way down here, and it's already done power 3 on the daily chart, right? It's already done accumulation, manipulation, distribution when we're bullish. Classic, exactly what we look for. So that's already been seen. So at 9:30, we're nowhere near this midnight opening price here. So what I'll use is what? the 9:30 opening price. And then you'll see it dips just below that 9:30 opening price, gives smart money a nice little discount below that opening, and then we launch higher. So midnight is the opening price as it relates to the daily range. 9:30 is the opening price as it relates to the morning session range. They're both helpful, but if we're not close to the midnight opening range, or the midnight range rather, then I will use the 9:30 opening price. So it really all depends on where we're at. If 9:30 opens close to midnight, then I'll use both. They're both helpful because ideally, if you can see when you're bullish, the best long entries are going to occur below that opening price here. Right? That's how we use opening prices when we are bullish. So yeah, so to answer your question specifically, you can enter with a lot of confidence here, right? Because we've already left that opening price. So we're already in what? Distribution, because it's already seen accumulation manipulation. So when it's in distribution, it's gone. So it's not likely going to drop all the way back down here to go higher because it's already done the work of accumulating below that opening price. So now it's just going to take off and blast off to the upside. And then it gives a little bit of a discount here and then takes off. So you can buy with a great deal of confidence around that 9:30 opening price because it's enough to give you a minimum threshold for a Judah swing. Right? You don't want to have to see a huge run to frame a Judah swing because it doesn't need to be big, all depending on where we're at in the market structure of that day. Benson, on top of the question above, should we aim for low-hanging fruit because we might anticipate the level of order flow? Yeah, that's a good question, for sure. So when there's no high impact news, expectations are managed, right? Because it's not as likely to be a big range day. There's not as likely to be as much volatility or a low resistance liquidity run. So when there's no high impact news, that invites the probabilities of it being high resistance liquidity run. That's where it's very important to be able to recognize the signatures of high versus low probability, because that is a huge skill set that you want to be able to have so that you can trade the best days and avoid the more difficult ones. And absolutely. So if you have expectations that it's not going to be as good of a day, then you're going to want to do what? Manage expectations, low hanging fruit, get the trader paid. So absolutely, yeah, thinking in the right direction. Lotus, Dow Jones, fresh new highs. Thank you for your insight. Thank you. Absolutely. Indices are ripping. Esam, thank you for everything. Yeah, my absolute pleasure. World Madness, macros are life-changing, for sure. For sure, macros are awesome. Got to know how to use them, right? Got to know what price signatures you want to see in the macros. Man, when you tie that together, it's absolutely insane, the amount of precision you're able to have with this stuff. So, all right, guys, that's going to be it for me here today. Don't see any more questions rolling in. Appreciate the good questions. Appreciate you guys joining us here today. If you have any questions or, again, any suggestions on things you guys would like to see on the YouTube channel, let me know. The next on the agenda is the Notion template, which I got to get out to you guys. I'm probably going to do that Monday, Tuesday. And then any other suggestions you guys have would be more than willing to incorporate that into the schedule. So with that in mind, guys, have a wonderful rest of your day. Daniel, do you trade? Yeah, that's already answered in all my lectures. Yeah, we trade high impact news. Yeah. It depends on the high impact news. So if it's it just depends on the high impact news. Take care. Have a good Sunday, guys. I will see you on the next one. Have a beautiful rest of your weekend. And we'll see about trying to do a live stream here this week. Maybe if I get paid, get what I'm looking for early in the week, I'll make some time to do some YouTube. But again, like I always tell you guys, I'm a YouTuber second. I'm a trader first. So keep that in mind. I'll do my best to get active on YouTube for you guys. And I will see you guys then, and it'll be just as lovely as always. Take care. Have a good one. See you guys.